so the numbers are out. There was a little bit of optimism. There was quite a bit of optimism in the auto industry coming into this year, though Mercedes was a little bit guarded on the outlook. How has the first quarter sort of borne out?
Well, if you look at actual numbers, actually pretty good, right? So definitely in excess of the guidance and the market expectations. That's, I think, what you can take from the numbers. Strong pricing, a good level of demand for our top-end products. And we could use that, to offset a higher raw material cost and inflation, exceeding expectations on the car side, but in particular also on the van side. Looking forward, what we're saying here today with the guidance is that we confirm the guidance, but at the upper end of the guidance. So you see a level of comfort built into that statement moving forward, that we can hold the performance also for the remainder of the year with all of the levers that we could pull in the first quarter.
And in terms of the geographic outlook, I see there's sort of sluggishness coming in here in Europe. That seems to be slowing down. I know you had a full order book. The U.S. is good, but not great. I know the story was great, and China really sort of the uplift. What do you expect for the rest of the year in those three sort of regions?
Well, absolutely. The market environment is still pretty volatile. We see the level of demand still, at the lower end. We said, February in Europe, a bit sluggish. But the order book, takes us well, into the remainder of the year. Whereas, demand in the U.S. is really good, is solid. And now, in particular towards, the tail end of the quarter one, we could see the demand, coming up and coming back up again in China. So all in all, that supports our guidance statements in terms of, the sales at about, the level of last year, maybe with an opportunity on top.
And with the new E-Class, all sort of signs are pointing to doubling down on the sort of luxury play, higher prices for your vehicles, kind of pushing that higher and higher. But of course, we've seen a lot of headlines of price cutting going out through the industry. What makes Mercedes immune to that?
Well, good point. You could see in the first quarter that we were able to increase our top-end offering by 18%. And what is behind? It is the product substance, which is in high demand. You just mentioned the E-Class, which we revealed this week. Great feedback from the market last week. The EQS SUV Maybach, perfect vehicle, which combines the BEV and luxury, but also the GLC being in high demand. It says product substance, which makes the positioning of the markets of the products in the market, and allows to pull the pricing, as we did in the first quarter, as we continue to do, as we now proved over a couple of consecutive quarters. But at the same time, it's also important that we're disciplined, that we are responsible in how we serve the market. That is where we switched gears, and that protects the pricing, which translates in the margins you could see again in this quarter, and which we definitely intend to hold in the quarters to come.
And on the margins, do you think you can get any higher on that? Where do you anticipate you can get margins?
Well, today, we confirmed the guidance on the car side, for 12 to 14%, being at 14.8 in the fourth quarter. Could say it goes over a cliff. No, that's not what we're saying. We're saying we see the margin for the full year at the upper end of the range, namely 14%.